Hi everyone, I am Dr. K. Rani, Assistant Professor, Department of Commerce, Dr. SNS Rajalakshmi College of Arts and Science. My subject name is Applied Cost Accounting. My topic name is Cost Sheet. What is cost sheet? A cost sheet is a financial document that provides the details of cost that the business has incurred in producing a particular product during a specific period. Cost sheet is designed to provide a detailed breakdown of the various costs incurred during the production process. It shows various elements of cost like prime cost, factory cost, cost of production, and total cost. Importance of cost sheet. Total cost and cost per unit. The cost sheet provides data related to the cost incurred the production of a particular product. This cost data provides both the total cost and per unit cost of the product. Second one, provide information. The cost sheet shows the cost incurred in the production of a product at a very production level. This includes the cost of raw material used, wages paid to labor, cost incurred in administrative work, and cost of selling and distribution. Determination of selling price. The cost sheet helps in fixing the selling price of the product. Decision making. Cost sheet helps the firm in decision making. The cost data provided by the cost sheet helps in making a wide range of decisions, such as decisions related to the purchase of raw material and equipment, fixing of selling price, the best investment method for cost saving, etc. Tracking of expenses. The cost sheet helps in tracking the expenses incurred in production. The cost sheet provides cost of data from every production level, so management can easily help the tabs on all the expenses. Preparation of tender. The cost sheet helps in preparation of the tender. An estimated cost sheet is used to the management. The cost sheet from previous cost sheet is used to prepare tender and quotation and estimated price changes. Components of cost sheet. Prime cost. Prime cost is the aggregate of direct material cost, direct labor cost, and direct expenses. Prime cost has alternative name such as basic cost, first cost, or float cost. Prime cost equal to direct material plus direct labor plus direct expenses. Direct material cost is the cost of raw material that are directly consumed or used in the production process. For example, the cost of leather used for manufacturing shoe, the cost of cloth used in garments, etc. Direct material equal to opening stock of raw material plus purchase plus expenses on purchase minus closing stock of raw material. Direct labor cost include was paid to workers who were directly engaged in the production process. People also refer to it as productivity wages. For example, wages paid to machine operator, tailor, carpenter, etc. Direct expenses are the additional expenses which are incurred during the production process. Chargeable expenses or another name for it. For example, equipment maintenance, royalty paid in mining, cost of patents, rights, etc. Factory cost. Factory cost is the sum of the prime cost and factory overheads. Factory cost is known as by another name such as work cost, production cost, or manufacturing cost. Factory cost equal to prime cost plus factory overheads. Overheads are the expenses which are not directly related to production but are essential. Factory overheads are the expenses that are concerned with the production functions. It includes stationery used in the factory, small tools, salary paid to the supervisor, factory rent, depreciation on the plant, factory lighting and power, repairs, etc. Cost production. Cost production of is the sum of factory cost and administrative overheads. It is also known as office cost or administrative cost. Cost of production equal to factory cost plus office and administrative overheads. Office and administrative overheads are the indirect expenses incurred on general management and administrative function. It includes salary paid to office staff, managing director, and remuneration paid to the directors of the company, stationery used in the administrative office, postage, rent of office building, office lighting, legal expenses, depreciation on office furniture and equipment, etc. Cost of sales or total cost. It is the sum of the cost of production and selling and distribution overheads. Total cost equal to cost of production plus selling and distribution overheads. Selling and distribution overheads are expenses incurred on marketing, selling and distribution of product. It includes the cost of packing material, expenses incurred on advertisement, traveling expenses, rent of warehouse, insurance of goods, bad debts, etc. Cost sheet. How do you will prepare for the cost sheet? First step, the cost sheet find the prime cost. Calculated of prime cost include adding all the direct cost like direct material, direct labor, direct expenses, etc. Step 2. Another finding the prime cost. The next step is find of the factory cost. Factory cost is the sum of prime cost and factory overheads. Additionally, we include the opening stock of work in progress and subtract the closing stock of work in progress. Step 3. The third step is calculated the cost of goods sold. Cost of goods sold is sum of factory cost, office and administrative overheads and opening stock of finished goods, and we deduct the closing stock of finished goods. Step 4. In this step, the total cost is calculated by adding selling and distribution overhead to the cost of goods sold to find the total cost. Step 5. The last step is find total sales. Sale is the sum of total cost and profit. In case of loss, the amount is subtracted from the total cost. Thank you.